Good morning, everyone, and thank you for joining us on Morning Markets. Before looking at how asset markets reacted yesterday, it's worth just reminding everyone it's Friday. It's time for the Do More With Your Money show. So please do hit the subscribe button and you'll be able to get that content into your inbox later today. So just looking at asset markets from yesterday, really the main point of discussion has to be what we heard from the Bank of England. Focusing in specifically, we saw interest rates increased 0.75% to 3%. A large increase, but important to say that that was very much as expected by the market. Looking into the detail, I think probably the most interesting aspect of what we heard yesterday was around the difference between the commentary from the bank versus the market. And what do I mean by that? Well, really specifically, the Bank of England are suggesting that interest rate markets, the forecasts that we have for the interest reaching 4.75% is too high. The bank don't see interest rates moving that high over the next number of months. So that's a very explicit piece of guidance and something that we will all have to contemplate and grapple with over the coming months. I think the other thing to focus in on was yesterday the vote. It was 7-2 in favour of the 0.75 increase. The two dissenters voted for a 0.5 and a 0.25 increase. And really they were highlighting two points that are really important when we think about the challenges of forecasting at the moment. One, understanding and bringing into those forecasts the lagged effect of that increase that we've already seen in interest rates to the 2.25%. And also the fact that we are, or the bank is, presenting a forecast where inflation falls quite significantly over the next 18 months. And then by that I mean by the end of 2024, we could be looking at an inflation rate below target of 2% on their central forecasts. So quite divergent views emerging within the bank as well. So that will present an interesting and debatable point for the bank, the MPC, as we look to the meeting in December. I think the other key point to focus on from those comments and that difference between market pricing and the interest rate trajectory is really the amount of change that we've had to see, that the bank has seen over the last 7 weeks. It's worth reminding ourselves that we have a new Chancellor, a new Prime Minister, unfunded tax cuts removed, and a focus on fiscal prudence from the government. And that's certainly seen forward interest rate expectations fall from that peak of 6% to somewhere closer to 4.75% today. That has significant implications for the mortgage market in that mortgage rates will likely be much lower than was initially envisaged when we were thinking about an interest rate closer to 6%. And that's important for the UK economy and something that certainly we will see feeding through into mortgage rates in coming months. The other thing that I just wanted to highlight was how asset markets reacted yesterday. We saw a minor sell-off in the UK 10-year, moving out around 0.1%. But worth keeping in mind that that takes us to around 3.5%. When we were sort of in the maelstrom of those problems of the mini budget, we'd moved out to 4.5%. So really there's a 1% difference to where we are today, and that also is important to note. Sterling did depreciate around 2% yesterday, and that speaks really to the points that Chris was discussing yesterday, and that interest rate difference or interest rate differential that's emerging between the UK and the US. So sterling off around 2% against the dollar yesterday. Number of other things from yesterday as well to focus in on. Just one I want to highlight really is around China and this ongoing push and pull that we hear around the zero COVID policy. Earlier in the week, expectation that it might be being relaxed. Yesterday, some pushback. This morning, further rumours that it might be being considered that a change should be made to that policy. And that will be very important for Chinese assets, but asset markets in general over the coming months. I'll leave it there today, but please do join us again next week. Many thanks. If you're interested in taking your investing to the next level or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.